Hey guys, this is Simon with Trade and Perform Coaching. This is a review for the members of the trading room. Wanted to go through today's trade and do the market preview for tomorrow. So let's first jump over to today's trade and when we came in the morning, and we covered a couple of important things. So first, right, looking at the 15-minute charts when we came in the day, right? So looking at the overnight. Again, this is where we opened on NQ, right? And what I want to see is, in general, right, are we pointed down on the moving averages? There's nothing special about moving averages. They're not magic bullets. They just give you a quick eagle's eye look at what the heck is going on, right? So first, to jump to NQ. NQ is showing the hint, and I mean the slightest hint of a potential breakdown, right? But if you look at your charts coming in, here's your trend line, right, from the bottom. And we're nowhere close to breaking. Even though we were underneath the moving averages, we have not broken down. We were not trading below, on the 24 hours, we were not trading below the prior day's low, right? And this is approximately the mid, and we had not gotten below the mid overnight. We had not been able to sustain underneath the mid. Here's the 50-60. Here's prior days approximately low. Let's see, right here. Here's the overnight high approximately. You look, right click to extend right, and you can see we just simply were not trading below the mid. Here we go. We just simply were not trading below prior day's mid. We came right back to the backside test where we had supply come into the market, right, and attempt to push down. Backside test of the breakout, both in the U.S. session and during the RTH. Interestingly, this is the first day we failed to take out Globex high in quite a few days in NQ, so I would note it, right, but it does not mean it's weak. And obviously the first thing that has to happen in order to get any downside move, I put in your notes, is that we have to get below and hold below 54.25. So I put that in your notes again, 54.25. We have to get below and back below this supply area to start to re-examine areas lower. And then the next step is to be able to trade below that prior day's low. You'll notice the RTH, this is also this 54.30 to 54.25 is also today's RTH low, right? So getting below and holding below is the first step in, pardon me, I apologize. Getting below and holding below on NQ, that's the first step in having any kind of corrective move, right? When we go over and look on the RTH only, and again, all I'm using this for, all I want to see is, do we have things pointed in a generally downward direction, and have we broken any major trend lines so that I can say, hey, if I'm going to short, I have an edge to the short side, right? And you can see anyone who tried to short, you are right, you got some downside move, but if you try to stick it, it was very, very hard to make that trade work to the downside. Obviously overnight, I'm sure someone was smart and figured out that that was a high and rolled down. Not for my style of trading, right? Let's go look quickly at the NQ24, the 15-minute off the NQ, but the RTH, excuse me. There we go. Okay, we can see on the daily. Here, I'm going to just scoop this up. NQ has been on a tear. You can see we went flat, right? The moving averages went flat through here between the 22nd and the 27th. This is sideways consolidation. We're building energy for a move. This is the breakout, right? Here's where we had our supply, right? You don't have to think really hard. Obviously, we spent a long time up here and we were able to push lower from here, right? So one would assume, just from our knowledge of market auction theory and supply, if we get above, which we did right here, and we hold, that shorts are going to be squeezed and we're going to push up, right? So it doesn't always work. You can see here we built 2 days of supply, we gapped up, right? So I want to give you a reference on this, guys, really quick while I'm going through this, right? Okay. when we look through here, right? So come back a couple days later so you can see what I'm talking about, right? And again, okay, when we were here, right? See how this looks like? First of all, our trend lines have gone from flat, right? We're basically chopping. This is all balanced through here, right? We've now started a downtrend to the downside. We can pull our down. When we're coming in looking at this day, right? When we complete this day, we're going to go, well, geez, things are kind of heading down here no matter how I draw them, right? They're heading down. But notice the heading downness becomes less and less. And then all of a sudden, I can start to draw uptrend lines. See how nothing's going up here? See, when we're over here, right? See how we ended up making a wedge right in here? So this was an attempt on this day to break out of that wedge, right? Which is fine. This is all supply. I would assume in my head that when I got over here, that we were going to run to the upside. When we didn't, we trapped, and then we got below this wedge, right? You can see how we fell apart. Because why? We had 3 days of energy, 3 days of build. We attempted to break. Sellers responded in, trapped us back into the range, traded below the prior day's low, right? And then we just simply fell apart. So now we're looking at the same idea. We're building, some people I believe would call this a bear flag, right? We see this in here. And you can also see from this move what was essential, that we held below, 50 retrace. And you can see that we came right into the 50 retrace. And you could still say, hey, there's no uptrend here. All we've done is come back into the 50 retrace. But what this told us was there was now supply. And if we could get past the supply here to the left, right? See, push down, gap above. We get behind supply, drive, right? Come back, backside test supply, fall in, fill the open gap. Now this move right here, this is the mirror image move of this move over here, right? We needed to hold below the swing low. We trapped back into the swing low, pushed back in, filled the gap, which you would normally expect on gap fill, rejection. Notice that all that supply and all that effort to hold below these 2 points, right? So I'm looking at these 2 points, I'm going, hey, if I get above these 2 points, my next natural target were poorly auctioned all the way up till right here, right there, right? So if you look, that's exactly where we came today, and we've run out of gas. But we have to start that process all over. I would assume that if we get behind this supply area where people held down, right, and I can squeeze my chart in a little bit, okay, you can see there's nothing behind that 54.77. So we may pull back, right? But just like in here, this is not just like over here where we had a 50-60 retrace and it held that 50-60 back, right? When I draw my 50-60 here, right? Here's my 50-60 retrace. Notice there's 2 areas of supply here. One here, one here. If I don't get behind these 2 periods of supply, these 2 points of supply, all that's going to happen is we're going to come in, find responsive buyers. Those responsive buyers are going to be the sellers who were located here before, and they're going to push back up, and then it becomes a contest between getting back above the moving averages or holding below. We don't know which one that's going to be, right? But we do know one thing. Until we're trading below this 50-period moving average on NQ and holding below, right, like we did here, we consistently held below and pushed lower, right, until we get to that point, or we simply get this to move sideways and start building a consolidation point over here. I would not be looking short. And again, my first clue is I want to see to have the ability to trade below prior day's low, right? Just like when we were over here. See how this was the first day. Let me clear this up so everyone can see it. See when we were coming through and driving up through here? If you look very closely on NQ, prior day's low, prior day's low, prior day's low. Notice this is the first day we trade below prior day's low. What happens? It doesn't mean that we go lower, but it does mean that the quality of the market changed. We traded below prior day's low into supply. We were able to get back above. See how we came right into resistance right here? People invested in making sure the market did not get above that 5,400. We pop above 5,400. We backside test all the way through 5,400, right? That means these guys took a stand. They were forced to come in and cover. When we got behind that 5,400, that's when the market, and behind that supply, that's when the market was able to fall. If we look at the same concept right here, right? People put in an investment right here at 5,420 to holding the market down. As soon as we got behind it, we came right back, found supply, pushed back up. We have been unable to trade below prior day's low. So if I'm looking for a short, despite just all of a sudden the market coming out and having a long liquidation, which is possible, I'm not going to worry about NQ. Everything is pointing up on NQ no matter what time frame I go to. It's pointing up. And importantly, my 50-60 back from swing low to swing high brings me right into my supply area right here where people try to get pushed back below. This was the breakout. I expected that 53.80 to 53.60 to have responsive buyers back to the upside. Okay, now let's go look at ES real quick. So on ES, here's what we were looking at when we were coming into the day. This is what the day looked like, right? Notice everything on those moving averages, that's a 20 period and a 50 period moving average off of 15, everything is pointed higher. This is my prior day's low right here, 23.50. I know if I don't trade below 23.50, I have that there's not even the hint that we've stopped one time into the upside. So I had to have that 23.50 marked off, right? And what I would expect is if we did trade below that 23.50, that we would go into a balanced market as opposed to stopping, dropping, and rolling over, right? Market's not on fire except to the upside, not to the downside, right? Next, in this process, right? Here's the low. Remember, I'm not looking at today. Here's the low. Here's the high. There's the mid back at 24.40. That would be roughly, based on yesterday's close, would be roughly a 15-point return back to the a 15-point rotation down, back into supply, right? Someone invested here, pushing down, and we have lots of neat setups off of these supply areas, right? But I would expect responsive buyers first time in, either at the top of supply or because of the stretch, right? We close at 23.55, we get to 35, that's 20 down. I would expect responsive buyers at the bottom. Guys in the room, you know what kind of price action that we're looking for to see that there's a reversal in that location, okay? And then we look at today. So first we opened up. The 20 period I'm not so concerned about, but we have to hold below the 20 period to start to roll over. You see we've had an inability to do that for the last couple of days. Give you an example, right? We get under the 20 and the 50, we have an easier time rolling to the downside. We can't get below and hold below the 20 out of the gate. We open up. The first 15-minute bar gets us above the 20. We poke our head underneath. Is this a short? No. Why? Because we need extension and negative space. If you're familiar with art, right? I want negative space between that and the 20. That means like this. This is negative space, guys. See that? There's nothing there. I want negative space to use that as a short location. We obviously don't get that. And this, right, here's our first hour high. This is IB high right here at approximately 9:30. I believe it was 61.75. Let me make sure I got that right. There we go. We dojied indecision bar, 23.62.50, right? We draw our 50-60 back, break of IB high. That's a very high odds long side trade, right? Come up, back to the 50-60. We spend a smidgen of time underneath the 20 period moving average on the 15, come back up and retest the high, and then we balance the rest of the afternoon, right? So also, I want you to note on the 15-minute bars, right? Look at the supply that came in here, right? So if you want to see an example of what that looks like when we've had reversals in the past, right? You can see yesterday afternoon when we called a very late short. We get all these supply bars along the line. These weren't even very clear. They were very tiny, right? It's hard to see them on the 15, but you can see them back here, right? All these supply bars They come in, right? And as you know, they're important, not just because I think that we if they hold, we could roll to the downside, assuming everything else sets up, but more importantly, if we get behind these supply bars, right? So if we get behind right here overnight, I would expect to run up to the next area where there is supply. Okay, so these are now resistance. Close above, I would expect a continuation, especially with all the momentum we have to the upside. I would expect it to continue higher. You're going to need NQ to continue to perform to fuel it. We are very extended, right? So where do I expect us to start to break down? Well, the first thing I do is I have to get past the mid at 2360, right? And then I have to trade below the low. So you can see we had responsive buyers step in on the 15-minute. You can see where it wasn't overly strong on the 15 at the 50 retrace, but you can see where they stepped in. Where you can really see that they stepped in, and we're going to have to get below is all this supply, right? These guys from here to here, that area, that 2355 to 2350, they made a very strong stand in not letting it get below. Okay, so if we get behind that, right, I would expect that to become resistance and open the door because we've both traded below the prior day's low, and I would expect that to become the resistance to the downside. So to give you a reference point visually of what that looks like, right? Let me just pull a blank chart here. Let's pull this apart. Okay, so first, we would be below, if we get below to this 50-55, right? We would be below our 50-period moving average on the daily, right? Secondly, what does that look like when we have that? Well, look at the last time we came up, right? So we're going to go from this structure to the breakdown, right? So the first thing I'm going to point out when we're coming up is I'm going to say, look at the indecision that we had here. See this? All the responsive inventory to push down through here, that whole area, right, became important. But also, we had, see how we had very strong attempt to push lower here. We get behind. We squeeze the shorts, these inventory bars, these shorts that were located here, these sellers had to come back in. And then as you'll notice, as we came back, we made a very strong attempt to hold the market back up. You'll notice as soon as we got behind, we rolled over, and where did we come into? Our next supply area, right? Even though there's no strong supply wicks in that area, it still held up. What did we end up with? This is what that looked like. So here, we got behind our inventory here. There's our resistance. This became our support, right? 74 to 70 became our support. 78, let's just call it 78.50 to 80, right, became our resistance once we got behind it. Now notice when we're in here, everything is still kind of pointed up. See how what we do is instead of rolling over once we get underneath, all we did is we came back into the 50-period moving average. We're not ready to go down yet. Everything's pointing out, but notice it starts to get flat, and I want to step you through piece by piece, right? This is my supply area, and my next major supply area, I can see from just taking a peek, right, is going to be sitting right in here. This is the last place traders invested in pushing the market or attempting to push the market lower, okay, right in here. Okay, so now let's take it step by step and go through the day. We come through. Note, this is the biggest expansion below the 50-period moving average takes place right here. What do? We come right into 74.70. I'm going to ask myself, so if I'm looking at that and I'm trading and I buy this first move in, right, realize now I'm below my 50-period moving average. And I'm only looking at the 15, guys. As y'all know, I go into more detail on the 5 when we get in there. But as we're rolling through, see that? We're behind that 50. We fall all the way back. What does it do? It re-auctions this entire bar. But you do get an initial response. You do get an initial response and a rotation back up. What does that tell me? I could have scalped it, but I couldn't commit to it. What's the size of the rotation here? 80. And this is coming into the close. 74. The next morning we come to 70. Right to the backside of supply. Again, right? See, this is the first place, second place. Watch how it comes up. Now look, we come right to the 20-period moving average, right? Supply bar. I now know if I get behind 76, they're likely to run behind that. I'm likely to get short squeezed. If I don't, I have a good chance of coming back and testing areas lower, right? So this, so I'm going to say right now, if I close below 74, I'm going to be very interested in a short. I'm very interested in a short now, right? Look at it roll down. Okay. So from this short, we've now rolled down 72. Now for me, that's good enough for at least a scale, right? Notice I want my stop behind here, right? Now look, 68, right? And notice my supply area is right down here at 64, right? Hammer, right? Usually people think of hammers as reversal bars, but I know two things. If I get below here, they're going to slam us right into 64. And I'm making lower highs and lower lows. They respond off the hammer where? Back into the 20 period, still below the 50 period, right? And that's where we close. Now notice, we've now gapped above the next morning. Let's stop. We've gapped above. We're above the 50 and the 20, right? My supply areas. Where's my supply areas? I have two key supply areas here, guys. One here, one here. I expect one of these two, along with the 20 and the 50, to help me out. What happens? Let's watch. 1, 2, up. Now look, that should not have happened. See that? This is a 15 period. What do I know immediately? No response here, no response from the 50 period, and I'm below the 20. So, and I have no price action bar. I had an indecision bar right here, right? We've closed below, and what I'm looking for here is this kind of bar formation to set up above the 50 to push us back up. Now watch. Okay, see how we came into supply and they tried to hold it? This is a 15-minute bar, another indecision bar. Couldn't close above, right? And then look, everything is starting to roll to the downside. The only thing that's a shame about this, so notice, once we get under the 20 and 50, right, notice that the counter rotations become smaller and smaller. You can use this location to find easy access to shorts, right? Unfortunately, on that trend day down, it never gave you an entry, but you knew immediately that this was trend day down once it broke like this. And you can also see we came right up. See how we came right to 78, 75, right into supply, rejected down, and everything was, even though we were up here, right? So see when we're up here, see how everything is already pointed down, right? Okay, so now I want to bring it the other way, right? When we get over here to today, if you're bearish, right? So when we're coming in this morning, right, it's just the opposite, which is why I don't want to be short. Everything, no matter how I draw my trend lines through here, and I'm just going to do a quick job, right? No matter what I do, what kind of channel I draw, it's all up. Now, oddly enough, the one short we came up with was off of a stretch today, right in this area, and we caught this stretch to the downside. This was a resistance zone and a supply area. And you can look, we had on our 15 minutes, we had a full hour of somebody, we don't know who, it doesn't matter who, stepping in and say, I'm simply not going to allow this market to come back in, which we also know means that if they get behind this either tonight or in tomorrow's session, right, if we get behind this, and assuming that NQ is strong and that there's no disruption in the flow of the market, right, and we haven't traded below prior day's low, that this is at least good to produce a potential squeeze, and that potential squeeze is probably good for a move up towards 78 to that 82 area. Okay, so that's kind of a recap of today's setup. I don't want to go through the smaller setup, but clearly today we were not looking, right, for a short. I would suggest if you're looking for a short, let the market come in. Let the market come in and at least show you, hey, we've made an initial break. We have trend lines starting to move lower. We have a crossing of the 20 below the 50 period. These are where shorts get easier and you don't get nearly as frustrated. Understanding the trade plan and what we're looking for makes life much, much easier. And if you do take shorts, which is fine for aggressive traders, right, just be prepared to cover much more quickly. Above the 50 period, your 50-60 retraces are going to work much, much better from the break of IB high back above the 50 period on the 15. You have much better odds of your 50-60 retrace. That's a high odds setup, working very, very well. One thing I do want to note for the trade plan is, let me see if I can find it here, and I can't. So this is tomorrow's trade plan, right? So first of all, you'll notice, this is my checklist for tomorrow. Have we traded below prior day's low, meaning Thursday's low, number one. Okay. Number two, up above, I want to show y'all something here. See this whole area over here to the left? Starting at 2374, really all the way back to 2384. So two things. When we get to the price action back here, there's clearly was supply here. Buyers defended, right? And you can see when we got underneath, they sold, right? And you can see from above that there's a lot of heavily invested traders that invested in holding the market below 2379 to 2381. If we get behind this 2379 to 2381, right? Obviously with the constraints of a normal expansion in the range, right? So we closed at 2364. It's unlikely that we can get above 2384 in one day, right? But the important thing is, if we do get behind this 2379 to 2381, it is very likely to be a vicious move up into 84 to 87 area. And importantly, once we get above here, if we fail to get back below, right, because there was a lot of sellers here that are going to defend all this 81 through 79, right, that could be the setup for our next break to the upside, as it is for tomorrow. If we can get above 2366.75, I expect shorts to get squeezed up into that 70 to 80 range, right? And what I'd want to see, again, I'm cautious on the shorts and I'm aggressive on the longs, so long as everything, all the moving averages are pushing higher, NQ is still behaving, meaning all it has to do is consolidate to consolidate its recent moves to the upside, right? And I don't want to be short until I can get below. I don't want to be aggressive on my shorts until I can get below the 50 period RTH moving average, right? And then I'm looking for price action and structure that I cover in the room. So it seems to me like everyone in the room had a great day today from the feedback I got, and I'm glad to hear that. Let's keep up the good work, guys, and we'll look overnight if anything changes. Again, I think the key area overnight is this 60 to 58 area now, right? Getting below and holding below, that'll be the first clue that we may have a profit taking or corrective move lower to come back and build for more energy, right? And I would expect very much responsive buyers between 44.50 and 40. There's an HVN at 23.40.50. 20 down puts us into 23.44.50. I need evidence in this area because we're in the middle of a poorly auctioned area, and I'm pretty much willing to go at 23.40.50. I'm looking for responsive buyers there. So anyways, I hope everyone had a great day. That's the trade review for today, and let's keep paying attention. Everyone did a great job watching price action, structure, not being overly aggressive on the short side, right? And if anything, we could have been a little bit more aggressive on the long side earlier in the morning. It's something I'm working on myself. It's hard to do when we've had so many days up in a row. It's hard to bring yourself mentally to do that. But Brian, shout out to you in the room in particular. You did a fantastic job taking the 50-60 from the break of IB high back in. So congratulations. Talk to y'all tomorrow morning, guys. See y'all then.